Okay, so good afternoon, and thank you for the opportunity for Sky Eye Camera and Drone Technologies to present our company report. We are excited to share the results this afternoon. As a bit of grounding, I have experienced the effects of an illness, so I'm a little nasally, but I do have hydration if needed. But just want to give you that little heads up in case I need to take an Altoid or take a quick drink of water. But as you can see, our slogan is a view from above, and we are excited for the we're excited that from above, the outlook of our performance is going forward is going to be strong and bright. Okay, so I'm going to, over the next course of slides, I'm going to talk about our company trends. Our annual total revenue trends consistently rose the entire simulation. By year 9, we doubled our revenues. And by year 13, we exceeded the 1 million mark and have never looked back. Like our net revenues, our earnings per share saw a consistent rise. That was through year 10. And by year 13, we did take a sharp decline as we try to figure out how to stay above water. And by year 14, our team was able to make a comeback that you will see reflected in subsequent trends of this presentation. We had some ebbs and flows with our return on equity, with years 7 and 10 being the highest for return on equity. That is until year 14, which has been our best year ever. And our co-manager, Nick, will take the lead on continuing to build on this trend. Thanks, Nick. After year 5, we maintained a credit rating of an A minus or above, and even rose to an A plus credit rating for years 11 and 12. Having a high credit rating gives us access to better borrowing terms and lower interest rates. Let's discuss the trends for our stock price. So maintaining an acceptable stock price, it has been a point of struggle. And we experienced a significant drop in our stock price. We saw some upward trends for years 9 and 10, and again in year 14. We do keep in mind that our focus has been best in quality products, and we are confident that our consumers will rally around our cameras and our drones so that by year 17, we will exceed our rivals in this area. We are proud of our annual image rating. Our company focused strongly on our social responsibility and citizenship by providing 5% of our operating profit toward charitable contributions. We also held top ranks each year for the Corporate Social Responsibility Award. I love this picture, by the way. Our strategic vision describes the achievable goal of our organization since inception. We aim to make the view from above accessible, productive, and trusted, so that no matter what the time of day it is, or if it's for business or travel, our camera and drone technology will make that next documentary or adventure a videography and photography success. So what are our anticipated performance targets for the next 2 years? Co-manager Nick, as I alluded to before, has tirelessly spearheaded our goals to bolster our performance targets. He will take the lead with a consulting firm that we recently contracted with to help improve ourselves in performance. Now, with this goal in mind, we anticipate a $20 increase in our earnings per share, near 100% on our return on equity, and a stock price increase of 5 times the actual amount of year 14. Yes, it's an ambiguous goal, but we got this. Our credit rating for the next 2 years, as I mentioned above, we were anticipating it to be an A plus, but as I mentioned above, we've been an A minus or better. So we anticipate for years 15 and 16 that we will maintain a credit rating of A plus. I'm going to turn the presentation over to co-manager Chad to talk about strategy, and I'll continue to drive. Chad, you have the floor.
Thank you, Tara. Thank you, everyone, for joining our presentation. Our competitive strategy was simple at first, but over the years, we had to make significant changes to our outline. We wanted to have a better product before we started to produce more. In our first 3 years, you could tell by what Tara laid out that we were meeting those goals. But then eventually we had to turn up our production of every 3 to 5 years, bringing a new model and camera out. That we did it, the next 2 years after that. Then our cameras, we came in with a lot of upgrades up front. Sorry, I'm having an issue here with the. Can you move the next slide, please, Tara? There we go. Thank you. So our action cameras, we weren't at the top of the line when we saw Company D, but we quickly moved into the making sure that our cameras were up to date. We used a lot of R&D to ensure that we had great cameras. So we had the best. I believe we had the best cameras for the price that we offered. For our UAVs, the same thing applied with that strategy. We used the best technology available, and the performance spoke for itself for the price that we were given. Our production strategy was for our working staff was up-to-date working stations. Actually, in the first 2 years, we maxed out all working stations and had the best up-to-date and technology for that. We offered bonus programs for the fastest employees and training, constantly getting people better at and more proficient. And we offered a great benefit package. For the employees, we offered, like I said before, we offered great incentives to come to work. We offered a $1,200 attendance package for our employees, which is over 40% of the industry average, because we realized that our employees were the backbone of what we were selling. On to the financial strategy. Our financial strategy was, like I said, and Tara showed it in the earlier slides, that we were pretty consistent through years 5 to year 9, and then year 10 we kind of took a dip, so we came together quickly and came up with a different plan, and we used the 5 C's of character, capacity, capital, collateral, and conditions, and we met all of those. I believe in year 10 or 11 we took out 1 loan, and we've paid that off significantly, and we continue to have a great credit rating. And then for our stock prices and our earnings per share, again, we took a hit here in about year 10, year 11, and then we quickly bounced back after we kind of stumbled a little bit, but then we realized what we were doing, and we made significant improvements quickly after the 2 years or so of that quick stumble. So I'll give it over to Nick so he can finish this thing out.
All right, I get to talk about competitors. Our strongest competitor pretty much for the whole simulation was Team D. The past 2 years, Team D and Team A have been close in PQ rating, image rating, and market share. PQ rating for Team D was 7.3 and Team A's was 7.0. Image rating for Team D was 89, while Team A's was 95. And we took a lot of pride in that. Team D's average market share for year 13 was 26.5, and Team A's market share for year 13 was about 27.5%. We also had similar brand reputation scores, with Team A having a very slim margin. And for the drones, our strongest competitor once again was Team D. Our PQ rating was not strong in year 12, but we adjusted our numbers to increase our rating to beat all of our competitors. Team A and Team D was very close in PQ rating, brand reputation, and discount to online retailers, while Team A had a substantial advantage in market share over Team D. We were consistently looking at Team D's prices because we wanted to stay just a tad lower than them and also continue to have better quality product. Our thought process was a better quality product at a better price. Team A and Team D had very similar total revenue numbers for years 12 and 13. The big difference came from our expenses, and that put us a little behind. We can never really grasp how to maximize our stock price, and we think that hurt us and put us behind the 8 ball and put the team in precarious positions, working from behind and playing catch up. So in order to catch our biggest competitor, Team D, we need to prioritize ROE, EPS, and the stock price. We are in the process of repurchasing our stock, and that'll skyrocket our ROE and EPS. We also maximize our quality incentives. If we can go higher, we would. The simulation wouldn't allow that. It helps us guarantee quality and increase our warranty periods. We're also increasing prices and increasing special offers to help our profit margins. We do feel that if this simulation would go, another 2 or 3 years, we would catch Team D. We feel our dividend payment was too large and our cash reserve was not adequate. And because of this, creditors did not trust that we had the ability to invest in long-term projects. We needed to gradually increase dividend payouts as smart investors expect from the companies that they invest in. We feel that we screwed up the dividends, and we think that that's what tanked our numbers, and that's why we never saw our stock price increase at the rate investors wanted to see. And for lessons learned from the game, number one is strategy. We felt that we needed to strategize a little better, not only having a better strategy, but making adjustments and adjusting our strategy and being flexible when things go awry. We should have studied the competition a little better. We focused a lot on the customers, not much on the competition. In order to be competitive, we should have focused on the competition and made marketing and financial adjustments based on what they were doing. Adjusting goals and having stretch goals. We did not refrain from our goals. Sometimes admitting defeat and starting a new strategy is not the end of the world. We also should have stretched our goals a little. Stretch goals are primarily used for incentivized measures, and I feel we did not reach for our goals like we could have. Figure out how to be unique. We noticed that on the graphs on the competitive efforts tab, we did not stand alone on either the camera or the drone segment for the majority of the course. We should have taken some time to figure out how to be unique and how to set us apart from the competition. We did try to set ourselves apart with the best PQ rating by making R&D a priority early, but we needed to do more than just that. And lastly, just have some confidence. We lost our confidence and let the numbers take the wind out of our sails a little bit. This set us back for a couple of years, and by that time, we could not gain enough momentum to get back to the top. And that'll do it. Sky Eye is out.